Andrew, great. So I know that you at Cannon Asset Managers absolutely love Grindrod, or at least you did at a stage. Do you still have this love affair with the company?
Yes, we still do. We've held Grindrod for some time now, and yeah, it still remains very attractive to us. Yeah, it's going to be interesting to see what happens going forward.
Okay, so I know you were privy to the conversation I was having with the other Andrew from Grindrod. 50% stake sold in Cockett Marine Oil in exchange for 4 tankers, and also a 35% interest that was, of course, that was acquired by Vitol in the Maputo coal terminal at the beginning of the year. No real numbers being disclosed here, so it's really difficult to sort of gauge what is going on. But he did say that each tanker costs around $36 million.
Yeah, it is. Yeah, it is a bit of a tricky one at the moment. Obviously, we need to see what the price that they sold this 50% stake for. That's the big question. Also, when companies start talking of synergies, we begin to get very nervous. However, Vitol, they did take a stake in the coal terminal, so there's obviously some sort of partnership going on there, and they are seeing, so they say, they're seeing these synergies coming through and moving forward. So it will be nice to hopefully see this, but we know from history that sometimes they're not what they may to be.
But Grindrod also needed to clean up its balance sheet in a sense as well. Do you think this is part of the process that's actually been coming through?
Yeah, they've been doing it for some time now. You know, I think their balance sheet as it stands at the moment is quite strong. I don't think they really needed to do this deal, so there's obviously something in the pipeline in it for them. Their balance sheet at the moment looks okay.
All right, so let's also touch on the overall market performance today. We had Shoprite at the top of the top 40, up just over 3%. Woolies gaining almost 1%. The overall industrial sector actually posted a slight gain today. Resources coming under pressure, banks also shedding ground. And it's again the same story. The reason that the overall all-share index has been rising so significantly is because of the industrials.
Yeah, the industrials have been getting hellishly expensive. I think you can break the industrials up almost into two segments, if you like. You've got your multinational or your Indy 25. Those are your big multinational industrial companies generating earnings from outside or within the borders as well as outside of the borders. And then you've got all your homegrown industrial companies, and they're focusing on local earnings, and that's your construction companies, your Giokos, your IT companies, and they actually look quite attractively priced, and they've underperformed heavily your larger industrial companies over the past year. So, you know, it's a trend that we've seen continuing. Obviously, people like the African story, you like your Shoprites, you get your Africa exposure. You can still get that Africa exposure through the likes of a Grindrod or an EOL Bateman.
Some have been sitting up and looking at Shoprites, they say, a very exotic way to fund the expansion further into Africa.
Yeah.
Did you take, I know that it's not a value stock, so did you pay attention to some of the news that came through?
Yeah, we haven't paid a hell of a lot of attention to it, but she's looking at that capital raising that they did of 8 billion. I don't know what they need that money for at the moment. Their cash flow is very strong. They've got a strong balance sheet, so why they need this 8 billion rand at the moment, I'm not too sure. I'm sure Christoph Wiese and Whitey Basson have something up their sleeves, and there's a good reason for it. But yeah, the market didn't like it when it was announced, and we've seen the share rebound nicely today. It does remain expensive.
All right, I mean, within the retailers, you don't own any retailers?
No, we don't. Okay. Retailers all across the board, they look quite pricey at current levels, around PEs of in excess of 20 times.
So I know a lot of people on Twitter have also been getting in touch with us and asking about the fact that we keep hearing all this good news when it comes to buying into the diversified miners as Anglo American and BHP Billiton because of the attractive PEs. A lot of people saying that perhaps it isn't the right time. Where do you stand on this? Because it seems to be showing quite a bit of value within the space.
Yeah, Anglo and Billiton, they're both trading a PE of around about 8 or 9 times, I think. You know, looking at these 1 year trailing earnings numbers, they do look attractive. What you need to do with the resource company is actually look through the cycle. So looking at 1 year earnings, you know, they're obviously going to be biased towards what's happened to the commodity cycle over the past year. If you look through the cycle, so if you take a 7 to 10 year earnings number, average it, and inflate it, and then average it, you'll get a more realistic view of the DNA of what the company can actually do. Doing that, you suddenly see that Billiton sits on a through the cycle price earnings ratio of around about 20 times. Whereas Anglo sits at about 12 times. So there you get a slightly different picture. Anglo's looks a lot more attractive on that basis than a Billiton would do. So yeah, we prefer Anglo's at this stage. But I think, you know, both of them are fairly protected. You know, if China has this soft landing that everyone talks about, your base metals, you know, China's not going to have a negative growth over the next 10 years, so your base metals are going to have that support. So that's going to help Anglos going forward.
And I hear the
well.
story from everyone, really, but I don't see it being filtered through into the stock prices. I mean, we've got Anglo American back at 290 Rand. It was at 330 not too long ago.
Yeah, there's been some bad news around Anglos recently. Obviously, the Ministry shutdown of the development there. You know, your South American debacle with Mitsubishi, the sale of 24% of their stake to Mitsubishi in the South or Anglo. So there's been some bad news of late. You know, the story of your support for base metals, this isn't a short-term view. This is something that could play out over the next 3 to 5 years. So, yeah. We like the share.
Capitec out with results today as well. I know that you didn't buy into Capitec when you should have. That's okay, many didn't.
Capitec, it's a fantastic company. This company just keeps year after year producing these exceptional results. The headline earnings were up about 50%. Their dividend yield or dividends paid were up about 50% as well, 47%, somewhere around there. You know, they're transforming the banking sector at the moment. They're obviously focusing on your unbanked sector. Reading the Business Day today, they say that there's growth. There's about 8 million unbanked customers that the bank's going to try and target now as well. Capitec obviously got a head start on this because this is where they focus on. The bigger banks say they're going to try and undercut them now. Capitec have a return on equity of about 30%. They're not going to be able to maintain that and the other 4 banks just
203 Rand.
And watch this.
That must be so painful to watch Capitec share price at 203 Rand.
Yeah, Capitec over the past year, it actually hasn't performed that well when you think about it. Nedbank, Absa and FirstRand have all outperformed Capitec. And this is because it's priced in a price to book of about 4 times. It's been priced for perfection here. So if it doesn't get it perfectly right, you're going to see the other banks outperform it, which is what has happened over the past year.
So you're expecting more of a plateauing?
So, you know, unless they continue doing these sort of numbers year on year, I would expect them to underperform your other larger banks that are priced on more realistic book ratios of about 1.5 times. So
fantastic.
we prefer them.